Hi, today is Saturday, December 8th. This is a quick look at Apple, which really could be a leading indicator for whether we're going to have continued downside in the overall market or if maybe we've seen our lows as of Thursday and Friday of last week. Apple finally broke down below this gap. It completely filled this gap. It broke down below 169 and closed below it. I had a note on here that as long as this 169 level held on a closing basis, that this was your dip to buy right here. But it did not hold. It closed below. If this was a one-day thing and it regains back above 169.10, this filled gap, on a closing basis, then it is a dip that you can buy. You can buy it, but then don't hold it if it comes back and closes back below 169.10 on the day. Just dump the calls and try again later. If you're looking to buy common stock, this is certainly a place where you can begin to put, maybe 1/4 to 1/2 of what you wanted to put on for a common stock position in Apple. Right now, using this low, the halfway back to get back to the all-time high would be right here at $200. $200.89. If this isn't the low and we do head a little lower, this pink circle represents the area of all the different targets that would be the next steps down. If we dipped all the way down to 158.45, that would perfectly make this previous all-time high level at 195.96 the halfway back of this move. So it would be a double down from this all-time high to what was the previous all-time high before going into the earnings report that shot it to this all-time high in the first place. That would be a perfect double down on the loss of this 195.96 level. If we got to 158.45 or somewhere in that area, then the halfway back point of this whole move back up would be at this 195 to 196 handle. The 200-day simple moving average is coming in right here as well. It's at 194.54. Okay, so either we are done going down or maybe we have 10 more bucks to go down, in which case that is where it would be the next point that you would try and put on along with Apple. Okay, so 169, if it recovers that and then holds that on a closing basis, go for it. If it breaks that on a closing basis, you need to, it's okay to be long the common stock, but don't get yourself tied up in the calls. Wait for a little bit further move down. Okay? I hope that made sense. If anything didn't make sense, just shoot me a direct message and I will explain it to you. Okay? Good luck and good trading.